For the final trade of the day, Mike Patton, the head trader at Funder Trading, is here. Mike, what's your latest play?
Thanks, Angie, and thanks, everyone. Well, my trade of the day is Coterra Energy. Its symbol is CTRA. Now, this is an oil and gas company. It was formed by a merger of two other previous oil companies, and basically their metrics look really good. Presently, the stock's trading around $26 to $27 a share. I do think this is a good overall buy-in point because I do see potential upside anywhere to $31 to maybe $38 a share in the near term. However, to the downside, I would say if the stock starts trading about $25 a share or lower, that would be an indication that maybe the momentum is lost. But looking at their metrics, they're seeing very good profit margin growth. They're seeing good revenue. And also they're seeing stable investment from institutions. So it does look like a good opportunity. But of course, if it doesn't move in the direction we think, $25 a share or so will be where I would look for an exit.
What's your expectation, Mike, with the rebalancing of the NASDAQ 100?
That's a good question. I've been thinking about that because obviously the NASDAQ 100 has been outperforming the NASDAQ composite and the S&P by a mile. And that does tend to make the idea of the index a little unbalanced because it is too concentrated, as they said, into only a few stocks like Apple, Microsoft, et cetera. So I do think that the rebalancing, obviously, they're going to reduce the weighting of those stocks. I do think that's going to dampen the overall performance of the NASDAQ 100. The NASDAQ composite, we'll see what happens there. But either way, the rebalancing should dampen the performance of the NASDAQ. But ultimately, I think that'll just mean that investors will have to move their money out of the overperforming NASDAQ ETFs, et cetera, and maybe move them into other ETFs they think will outperform based on the rebalancing. So we'll have to wait and see how it all plays out. But my expectation is that that will cause significant cash flows out of ETFs and funds that are focused on the NASDAQ, where they've benefited tremendously from the growth of those companies. And then that money will have to flow somewhere else. Perhaps you may see some more money flows into tech sector ETFs because those will still be heavily weighted with stocks like Apple and Microsoft. So you may actually see a lot of money move into some of the other tech-focused ETFs, I would guess. So that's the direction I think the money flow will go. But we'll always have to wait and see.
It's going to be interesting. Thank you, Mike.
No problem.
Go to businessfirstam.com for where to see our show on TV.